Hello, everyone. It's Andrew from the Market Mindset. Today, we're speaking with Madison Metals, and this is a very attractive and interesting story. I like mining with a twist, and this is Duane Parnham. He's the executive chairman and CEO. And why I say that is not only are we tackling clean energy and we're looking at uranium specifically, this is a tokenization, and they found a way to fund their company in a very, very interesting way that I think not only does it meld the future of energy, but also the future of finance and how maybe we might be able to fund and capitalize some projects. Welcome, Duane, to the show. It's great to have you here. I've been looking forward to having this conversation because it is, once again, very innovative.
Thank you, Andrew. I'm glad to be here.
Excellent. Well, let's just start off with the bare bones. I mean, you're a mining exploration company looking for uranium. Namibia. I think you've got a property in Kenora as well.
Yeah. So my background is I've been in mining for 30 some odd years, working in Namibia, 22 of those. We licensed a uranium mine in the last cycle in 2007, hit 2008. But since that time, I've had a number of successful exits for our shareholders. And of late, the group came back and said, "Hey, Duane, uranium's looking very exciting again. You're Mr. Namibia, shall we say? What can you do?" So what's really, really interesting from a property acquisition perspective for Madison Metals is 2007 to 2017, the Namibian government imposed a moratorium on exploration for uranium. During that time, of course, we had a boom and bust cycle, mostly due to Fukushima. So now we are back here in 2023, and around 2022, everyone's getting excited about uranium. Went back, and lo and behold, there's some amazing projects in Namibia, close to Rossing, within wedging pitch. I'm not a golfer, but let's say a 6-iron if you're Tiger. Right in infrastructure, roads, power, labor, everything's there on mining licenses that were issued for other commodities other than uranium. So, I mean, the suite of projects that we have are amazing. And then one of which had historical resources that were drilled out in 2015. SRK, Dr. Bowell was the consultant, and they put out a 43-101 report back then. Uranium was sitting at $35 a pound. There's a sizable deposit sitting there, wide open in all directions. So that's our flagship property, and that's the one that we've now entered into this forward sales agreement.
And this is, we've spent the last year doing quite a bit on uranium because we're big on base load. We love talking about batteries and the technology. It's great what we can do. But people are starting to finally come around to the idea that, wait, where's the base load for all this electricity going to come from? So I don't want to spend too much time on that because we've got loads of videos for my subscribers. You can go take a look at that. We'll have it a given that they've all accepted that nuclear is part of this future. We see in COP28, the U.S. saying they're going to triple their production. That's just the U.S. What's interesting is that, yes, there's Athabasca that could pump some production into the U.S., but having say a resource or finding a good discovery in Africa, that would be an excellent place to feed into Europe as well. So I'm just trying to get people to think in their heads, okay, if you find something there, the feeder stream would be naturally North Africa as well as into Europe.
Well, it's global. I mean, with the exception of sanctioned countries, add India onto Namibia as a sort of a countrywide political decision they made. But yeah, I mean, Namibia has been producing uranium since 1976. There's 2 operating mines right now. I think it's kind of the top 5 country in the world producing uranium. So jurisdiction-wise, one of the best. Of course, I've been working there 22 years. I've been navigating projects, licensed a uranium mine, and I'm super bullish on uranium right now. It's a different setup than what we saw in 2007, which was a futures-driven event. Right now, as you correctly pointed out, the underlying fundamentals for uranium are super powerful, and I'm on record for a 3 to 5x move from here on spot price based on these solid fundamentals.
Yeah, you said like $35. We're at 80 right now.
80.
And
if we go to 500 or more,
it could go. Yes, because even Cameco's coming out saying, listen, there's a demand issue here. Like everyone always used to say, oh, Cameco could just ramp up production, just spit out more. And they're kind of hinting at, well, listen, and great. There's lots of Athabasca properties that they can look into, but that's a lengthy process too. But needless to say, it's going to require a ton. Not using the word funny, but it's going to require a lot of uranium. And I was speaking to one kind of expert in the field. They're saying like an SMR. People go, that's the new big hip thing, an SMR. That requires front end loading. So they need to order all of their energy up front. Yeah. So any of these SMR projects in all of these countries, I think there's 4 different projects being considered in Canada. That's a lot of also demand right off the bat to say, we want this right now. So
I gotcha. I love the latest Sprott quote, and I hope I get it right here, but looking forward to 2040, there's 1.5 billion pounds of uranium that's unsecured by utilities.
Yeah.
So, I mean, it's a ridiculous number. And unfortunately, what people don't understand is you can't just turn on a mine tomorrow. There's so many conflicting dynamics to get a mine up and running. Even to upgrade or to increase production, there's just a lot of issues that are attached to it. So we haven't been exploring. This is the biggest problem for us right now. We haven't been funding exploration companies like ours and others in the last 10 years or more from the last cycle. And it takes 7 years to get a mine, basically funded, licensed, permitted, equipment bought, and up and running. So unfortunately, right now, the dynamics are so strong, and I think we won't be able to supply enough materials to meet the demand that's coming.
That seems to be the general consensus. And then luckily, governments are waking up, because it almost seems like they fell asleep for a while thinking, oh, we'll just get the metals. And then they had to stop to go, ooh, wait, this might be actually challenging.
Yeah, and then you got a conflict in one of the largest metal producing regions, and then you've got supply chain disruption from COVID.
Yes.
You've got lack of funding. You've got so many uncertainties in the globe right now. With such a dynamic, opaque trade in uranium, it's going to create a lot of problems. But I think I have a solution to that. So, I mean, I'm pretty excited about what we're doing.
Yes. So, okay, we've got that. That's step one. It's very easy to make the case. Nuclear is the safest. It's green. You're solving a very major problem right there. Infrastructure wise, luckily, I know Namibia. I've looked at a number of companies there. It is a great African country to work in. Highly skilled labor. Lots of great projects, copper, you name it. It's a great place to be, so people can feel comfortable in the region. And of course, they can see where that end use result will be. We've covered that. But this is the part that also for younger people that want to look to solve problems, this is where it gets even a little bit more interesting and exciting. Walk us through how you've taken the financing approach in a very innovative way.
So what we've done is we've, again, on the backdrop of these projects in Namibia, which we have expertise in developing, we have one in particular that has historical resources, and we're very confident based on our assessment and with SRK third-party verification, we can take that and put it on chain. So we've sold on a forward sales agreement to an IBD in Bahamas of 20 million pounds of uranium. It's future production, but it's in the ground verified by third party. And it's no more than putting a futures contract on chain. And then the IBD in Nassau, Bahamas, is responsible for the tokenization part. That way is separation from Madison mining to whatever is going on with the token. But what's really cool and where I'm getting excited is the token actually got listed this week. So now there's a trade on Uniswap, and you can follow the progress of the trade with uranium. It's called Uranium 308. And so that's really exciting to me, because now it's actually proof of concept that, there's a real development team behind it. There's a real trade. It's listed. You can bid and ask. You can actually go purchase it. And then what Madison's responsible for is taking that nominal contract value and then converting that into US dollars on sort of sales or a borrow or whatever, we decide to fund the whole operation. And of course, net benefit to the shareholders of Madison is non-dilutive. So we don't have to go back at a very difficult time. Usually when you need money, it's not available and it's very dilutive to the shareholders, or we've got to go and do a sort of a debt arrangement financing and put, a whole lot of debt on our balance sheet. So, I mean, 30 years, I've come up with kind of a really innovative, disruptive way to bridge traditional mine financing with cryptocurrency. That's basically what we're working on.
It's very, very cool, because people in the junior space will know what happens is you start putting holes in the ground, even with good results. Hopefully your stock goes up, you can raise money at a higher price, but it still gets diluted. But most of the time it's mixed results. The market could be crazy. It drops down, then you have to dilute at a lower price. So this avoids that issue completely. Not only is it not dilutive, you don't have to worry necessarily about the price. How does the contract work, though, just so people get a sense? You have to, quote unquote, deliver 20,000 tons, but it's really just a dollar amount. So you've got a locked in price, I assume, with this futures contract.
No. So what happens is we sell forward 20 million pounds of uranium of future product from our, from our deposit that we're working on with SRK. 7.65 million pounds attributed to Madison today is actually economic at $80.
Okay.
So when they did the report back in 2015, uranium price was 35 with a core of production at $81 pricing. So what we're doing now is getting back to what we do best, and that is work on the ground, drilling, expanding, verification, putting an economic plan towards it, and and then permitting and eventually mining this. I don't think there's a spot on the globe today where you could put a mine into production so fast, because it's all open cast, low cost production. We're trucking distance to 2 operating uranium mines, one of which is depleted their ore reserves in 2025 and looking for expansion. So that's a really unique dynamic that is available to us. So permitting and some of these deposits that we have are on mining licenses for other commodities. However, that process of converting it to uranium production is a lot quicker than, say, starting from scratch. You can drive your pickup truck right to these deposits and literally drive on top of it, look at the yellow staining, sample it, blast it, whatever you got to do to get it out of the ground, truck it to a facility, and away we go. So that's what really got me excited about entering into this type of a forward sales, because normally a mining company wouldn't do that because the risk profile is so high. I mean, there's so many factors working against you in that delivery. So I just feel very confident that our situation is unique. And I think that we'll be able to deliver our product within the contractual time frame, and then we can benefit from those sales now, delivering uranium tomorrow.
So can I liken it to, you see whether it's Ford, Stellantis, looking at Argentina Lithium. Ford, I think, was talking with Lake Resources, where they entered into MOUs to say, we'll purchase X amount here, and for that we'll give you this for continued exploration.
Basically it. So with our future contract, well, you can value that contract today at $1.6 billion. We are attributed 50% of that. So whatever our conversion rate is to from nominal contract value, let's say, to hard dollars, that's the process that listing the token now will go through. We can either borrow against, we can either sell to individual, we can sell to trading houses, we can sell to utilities. All of those dynamics are working within the tokenization. And then you're also developing a brand new market for uranium, because typically we have governments, we have trading houses, and we have utilities, right? Those are typically your 3 end users for uranium. We just developed Madison Metals a 4th buyer, and that is the crypto community, where they're investing with purpose, this green energy movement, this uranium movement. It's very exciting for them. And it's the first time ever that a retail investor can access a trade with uranium outside of, say, buying a spot participation unit or an option contract, which are extremely risky, and most of the times you lose your money because it's you're not a sophisticated enough investor to play options trades, right? So this gives the cryptocurrency community an access to a commodity that otherwise they've never been able to buy.
Now, I guess, is there like a white paper that they can kind of download to look at? Because I remember there was one interview you did where you were talking about when a lot of uranium analysts, they value uranium in the ground. It's like, it's very poor. Like they're going to give, you say it's conservative. Was it like $2 or $4 a pound or something?
Yeah, that's back at $20 spot.
That was at 20. Yeah.
Yeah, so those figures will change today. But
It's
still,
minuscule.
you're getting such a little small nominal value of your underground resource, and a lot of it. I mean, I understand why, because there's so many risks involved with getting that out of the ground and delivering it as a final product. So I get it. So, but that may not apply to every project, and obviously institutional analytics will apply differently to each project. Some may demand a higher in the ground price, others may get less or zero. If they don't feel they'll ever be mineable, you could literally get at a zero valuation. So I mean, it's a scale, but what Madison is doing is taking all of their 50 years plus experience of and 22 in Namibia, licensed to mine, saying, look, we have a really great opportunity. We can extract this uranium very quickly. We can extract it at a great price. So we're confident to put it on chain, sell forward a portion of our deposit, which most people will do. So 20 million pounds, we think that may represent 10 to 15% of our overall size once we get in there and drill. So there's some work that we need to do, obviously, to expand it. But at today's rate, $80 a pound for 20 million pounds, 1.6 billion, we get half of that. That's just an amazing, contribution to Madison and the shareholders.
Yes, and we kind of glazed over it a little bit. But it's very important. You spent a long time in Namibia. You've built up a lot of contacts, and that's crucial. If you go to any place, whether it's if I go to Alberta, if you don't have the contacts to work with people, life becomes very difficult. Maybe kind of let us know like the wealth of knowledge you have in that space as well, because that makes people feel comfortable when they go, well, Namibia, okay, well, that's kind of far away. What's the expertise there?
Yeah, I mean, I started in 2000, I think it was, and we looked at scorpion non-sulfide zinc. Sorry, I got to remember back. That was kind of like our entry, and then we worked on Undundu, which is a gold project today that Osinio is developing and with B2 Gold and such. So I mean, we've navigated politically, financially through the politics of Namibia successfully. In the mining game, Namibia is very, very powerful, geological environment, which was almost classified as #1 in the world at one point. I mean, it's just so developed. It's not even like Africa. It's kind of like Africa for beginners, shall we say, where the infrastructure there is so supportive
Yes.
for mining and for international investment. For example, one of the projects that I did, we went offshore, oil and gas. A company called UNX Energy. We funded that with $60 million and we sold it for $730 million in 18 months. We drilled 3 wells with our partner HRT and Galp. We didn't find oil, but the geological success from those 3 drillings had led Total and Shell to find 11 billion barrels today.
Oh.
So Namibia is really, like, from the oil perspective, is going to be a transformational event for them. It's going to be like a tsunami is going to hit them, when eventually they're going to be developing these oil fields. So we've been involved in that. We were able to help and contribute to a major success. Unfortunately, it wasn't our success. But you can't have everything. So,
No.
but little bits of contribution over the years politically. We've hired and we employ all of our employees. Well, a good portion of the core employees that we had back in Forces Metals when we developed that project. So yeah, we've got a great team of geological staff, administrative staff, and support staff consultants in Namibia that help us, from the Canadian head office board.
But this is, I mean, once again, I'm going to, reiterate it. It's so interesting to be able to, be that bridge towards like the younger crypto crowd who, I mean, they know there has to be some energy changes, and it's very daunting for someone to go, let's get into nuclear. I mean, yeah. It's hard enough to kind of understand the crypto space, how all it works, then go, wait, that's overwhelming. If they have a product and they can see, okay, wait a second, that I can be involved in this and make some money and fund this, not necessarily in equity, because some of them don't like equity. It's a very interesting way that they can look to help fund projects and get the future they want to see.
Exactly, and I'm proud to say that like Bahamas, Namibia has actually adopted regulation to accept digital assets and trading of digital assets. So, again, you've got an underlying governmental jurisdictional support mechanism that helps this type of innovation. And, it's at times when you look at mining, and I, 30 some odd, even though I don't look at, but 30 some odd years in mining, it gets a little boring and mundane, and certainly trying to finance it and such is always a challenge. But when you have so many positive movements and support mechanisms from jurisdictional to, this new crypto industry and the new type of investor and digitization of real world assets and, this whole movement, this financial product movement that we're getting involved with, that's what's getting me really excited about going back and developing another mine. So
yes. Well, it's that
so
interesting implementation of an actual, like an NFT with a smart contract where someone can go, we're doing this now. It isn't just, oh yeah, that in theory could work. Someone's actually doing it. And I think eyes will be on you to go, ooh, they're having some success with this. And that can take off in a hurry for sure.
it definitely can. And I think it definitely will. And I've been, blessed with a career of first. So, like that oil, UNX Energy, everybody wanted to do a UNX Energy deal, even though they didn't know how that was all done. But, this is going to be another first. It's disruptive to the industry. It's innovative, and it's bridging, like I said, the traditional, mining funding with cryptocurrency. And I think it's going to benefit both because, BlackRock is quoted as saying that the RWA and tokenization of real world assets is going to be the movement in the future. We're going to see how the regulatory environment plays out, but Bahamas is supporting us, Namibia is supporting us. So the two jurisdictions that we're playing in are giving us that confidence that we're doing the right thing right now.
And that's where it works so well with, say, mining, where if you're using a futures contract, I mean, you want those contracts to be honored. I mean, that's a good thing. So the regulation to make sure that those are honored. This is where the blockchain and the smart contracts, that's where they can really work well. And it's really cool to see, commodity, not only just the commodity part, but how it's funding the mine. That's what's so fascinating. And it's it's like you said, it takes like an old world model that a lot of people are almost scared to go, ooh, that's a hard model, to, okay, wait, this is a new innovative way to breathe some life into this again.
And if you look at uranium as a commodity, specifically the OPEC trade traditionally, where we just don't understand where the gap between consuming 190 million pounds a year and producing 140, 150 million pounds a year, we just don't know and never really understood where that gap was filled. When you bring that trade on chain, it becomes from an opaque to a completely transparent.
Yes.
So even governments that have sanctioned, countries and maybe individuals or corporations, now with it on chain, we can actually see who's conducting those trades.
Yes.
Because of those identities are, open sourced, and those are open to everyone to see, who's participating on our token side and who's transacting on that. So this is a real, I think this is going to be a real plus. Right now, I know the development team are really focused on the trade. We've only been listed for less than 2 days, really. And and just legitimizing the trade and pegging it to the spot price of uranium is a really important factor for them. And I know that that's what they're focused on. And we don't get involved on our side. Really, we're just here to support the 20 million pounds so that they can go and say, hey, we have a legitimate RWA token. It's trading. It's real. It's pegged to the price of uranium. And then in time, as this gets converted to US dollars through, the interest in owning part of it, I think it's going to be a real sentiment to, actually looking at cryptocurrency as a peg to spot price, as opposed to maybe getting that quote every week or, whenever there's a trade or whenever, a group of individuals or corporations say, hey, here's what's going on in the uranium space. This could be a proxy to spot uranium. So that's what they're trying to achieve in time.
What are some kind of metrics? What's going to happen in the near future here for, identifying, anomalies or areas that you're going to drill, and what's that going to look like over the next 3, 4, 5 months?
Great. So yeah, we're unfortunately we're coming into December in Namibia.
Yeah.
It's a it's a holiday month going into January, so we're going to pick up our drilling early January. It'll be our maiden drill program on a historical resource that was drilled by others, backed by SRK's analysis and 43-101 report. So we're going to drill a 4,800-meter program. We're going to drill a couple deep holes to prove a geological model that we think we have, and also that will be geared towards expanding because the deposit is open in all directions. So that's just one advanced project. Then we have a couple other really exciting areas in behind that we want to get in and look at.
All right. Yeah.
Drill holes in it. So there's some depth in size that can come out. So with this initiative now coming out, helping us fund at least the drill bit at this point, that's going to add a lot of information to Madison and its resource base, and kind of what we do best, and that is the geological confirmation part.
Yeah, and having that historical resource, although we can't use it, I mean, it's you guys can use it to drill off of and do a bit of a step out and maybe expand upon it, maybe get some more ounces out of it as well. That'll be a good starting plate for people to kind of look and go, okay, now we know what we're dealing with here.
Well, I mean, according to SRK, it's a 17 million pound envelope based on 86 holes or something, with a core of 9 million pounds that was economic at $81 a pound. So
okay.
The core part of this deposit now from 2015 analysis is economic.
Yes.
So that's a huge achievement. I kind of took some risk getting in there and, doing what I do and doing these agreements early on with an understanding that we would see an uptick in price of uranium. I did it with Forces Metals in 2006. I started Forces Metals when spot was $18.50 a pound, and it got to $140 a pound in less than 18 months. So, and I feel that this cycle is going to be a lot more powerful because again, those underlying fundamentals today are much stronger and much supportive globally, as opposed to just a futures trade. So I think we're going to have a longer sustainable upswing in uranium spot that's going to support the initiatives that we're doing both from the mining side and from the cryptocurrency side that our developers are doing. And I think, again, we're going to enjoy a pretty healthy run. And perhaps at a time, again, like 2008, when we had Forces going at 500 and some odd million market cap, when the rest of the world was, falling apart. This is a great trade, the uranium trade, for a hedge against inflation and a hedge against maybe some uncertainties that are coming. So I really believe in this. I recently passed 10% ownership in Madison Metals. We announced that. So I'm putting my money where my mouth is. And I really believe that we're on the right side of this trend cycle.
Well, Duane, this was fascinating. I really appreciate it. I always love interesting stories with a twist. I traded on the CSE under GREN, which is a very handy green almost. Yep. And of course, the OTCQB, MMTLF. Outstanding story, very innovative, very interesting. I think a lot of people are going to be watching. And we look forward to seeing what comes out here in January when you start hitting the ground as well, and as developments come along, because this is a very, very cool story.
Thank you so much. I enjoyed the conversation.
Take care.
Okay, all the best.